Welcome. In today's video, we're going to do a quick review on jumbo loan requirements for home buyers in the Dallas-Fort Worth area. For any buyers that have questions, you can reach out to us 7 days a week at jumbomortgagesource.com or call us at 800-962-0677. First thing is we want to establish exactly what is a jumbo loan. Considered a jumbo loan in the state of Texas. And what is it, just a basic conforming or conventional loan. Right now for the entire state of Texas, the conforming loan limit is $726,200. Again, this is for just a basic conforming loan, and this does apply for the entire state of Texas. This is subject to change and likely will increase some slightly for 2024. It has increased for, I believe, the last 5 consecutive years as home values have continued to go up. Fannie Mae and Freddie Mac, of course, have continued to revise the conforming loan limits higher. So any loan amount that is below this would just be a basic conforming loan. If it exceeds this amount, it's going to be considered a jumbo loan. The loan amounts for the conforming loan amounts, they even go higher if it's a multi-unit property, like a 2, 3, or 4 unit property. There are adjustments where it goes higher, but 726,200, that is for your basic standard 1 unit home. Medium home values currently around the Dallas area are about 310,000, just over 300,000. So you can see that for most home buyers, a standard conforming loan would be sufficient, or maybe even just an FHA loan. But for home buyers that are, of course, in the more expensive luxury locations like University Park or Highland Park, places like that, where many of the homes average over $1 million, of course, a jumbo loan will likely be in order for those buyers that are putting down smaller down payments. And we're going to look at the breakdown for the jumbo loans next. The jumbo loan limits, they vary based on the down payment, but there is financing available up to 95%. So 5% down for qualified buyers. And we'll look at some of the qualifying criteria next. But generally, loan amounts are capped to about 1.5 million currently in Texas. And this can vary, though, based on the location. Of course, in some other states, more expensive states like maybe California, those limits can even be higher for high cost locations. So it's a good idea if you happen to be in another state just to check the website and refer back to the website. The 90% financing for the jumbos, generally that's about in the 2 million, maybe $2.5 million range. And then of course it goes up higher the more down payment. Just like any other loan, really. But there are options well over $3 million for home buyers that may have a 15 or 20% down payment. We're going to focus really on the 5% and 10% down options. Those are the most popular options by far. Again, loan limits around 1.5 and slightly higher for the high cost counties. Credit scores generally 680 credit scores for the maximum amount of financing. Credit score alone, though, does not guarantee loan acceptance or approval. There are other restrictions in place for any home buyers that may have had a recent financial hardship in the previous 2-3 years, things like a bankruptcy. There are additional waiting periods regardless of the credit score. Loan amounts that are a little bit greater, once you get over about 1.2 million, those can require slightly higher credit score as well. These programs are fully documented loans, full income and asset documentation, just like any other mortgage, 2 years of W-2s and or tax returns. There are special options available for self-employed business owners, which we'll look at in one of the coming slides. Property types include all your primary homes, single family homes and condos. Investment properties are not permitted with this. Those would require at least a 20% down payment. Construction to permanent loans, those are okay, but they require a 10% down payment. This is a true construction to permanent for someone that wants to purchase their own lot, have their own builder build their own house on the land that they own. There are options, but those start at 10% down. This does not apply for a home buyer that's going to purchase a brand new home, a spec home maybe in a plain unit development that is being sold by the builder directly to you. Those are looked at just like any other purchase, and there's options that are available up to 95% financing for those transactions. Transaction types include just all purchase and rate and term refinance only. No cash out refinances up to 95%. And then for the terms, all your common adjustable rate, fixed rate loan options, all the common options that are available, fully amortized principal and interest. There is no interest only or negative amortization type options here. Combo loan structures are common, mainly to avoid PMI, private mortgage insurance. First and second piggyback loans are common to do this for 95 and 90% financing. Okay, for the 90% financing, 10% down, loan limits, basically everything's the same, except the loan limits do increase to in some cases, 2.5 million. And credit scores can be a little bit lower. Again, greater down payment means less risk to the lender or bank, so some of the other requirements can be relaxed. Documentation, again, this requires complete income and asset documentation, but for 10% down, there are special bank statement programs that are available for self-employed business owners, which we'll look at here in a minute. Property types, again, everything's the same there. Transaction types are the same, except this does include also cash out refinances up to 90%, and the available terms are all the same. And again, combo loan options are available to prevent PMI. Documentation and reserve requirements, again, most of the programs are fully documented loans. 2 years of tax returns, W-2s, for those buyers that are just regularly employed, they'll provide W-2s. And again, special options for self-employed buyers. 3 months of generally liquid asset statements, probably the most recent quarterly statement for any non-liquid retirement accounts like a 401k or an IRA. And these programs, they will have reserve requirements. Reserves are basically just the amount of liquid or non-liquid assets that a home buyer has left over after they make their down payment and their closing costs. After those things are satisfied, mortgage companies want to see a certain amount of reserves, and that reserve amount will depend on many variables like the buyer's credit profile, their down payment, and their loan amount that they choose. Higher loan amounts, when you get to maybe 2 million or more, those can require a little bit greater reserves. But reserve requirements can be met though with non-liquid accounts like an IRA or a 401k. Those can be used, a percentage of those accounts can be used just to demonstrate that the reserves are met. Okay, some additional jumbo loan programs. Again, for self-employed buyers, business owners, they do have the option for those buyers that have 10% or more down payment. They have a bank statement deposit option where they can qualify. Instead of using a 2-year average maybe of their tax returns, they can instead use an average of their actual business deposits. So this is helpful again for some self-employed buyers where their tax returns may not reflect true income, they can again formulate an average of the actual deposits uh, made. So that is helpful to really for those buyers that need to qualify for maybe a higher loan amount and again get more of a true debt to income. So that is an option again. This only applies though for business owners. And again, this does require at least 10% down. Vacation homes and second homes, they're available. Again, 10% down for those. Uh, Construction to permanent financing, true construction to permanent financing, again, that starts also at, with 10% down, up to 90% loan to value. That's a basic rundown. Homebuyers can learn more at the website. And of course, reach out to us and call us with any questions 7 days a week at 800 962 0677. Thank you.